Hey everyone, welcome back to Corporate Decoder, the place where we decode the boring stuff into something, well, maybe slightly less boring. Today we've got a dense report from investment managers, Series Trust Destru, AKR. The people behind a bunch of ETFs think of it like a financial checkup for several of their investment funds. So what's the big story here? Well, it's a look at how these funds performed over a 6-month period ending the 30th of September 2025. We will sift through the numbers to see which investments are doing well, where the money is going, and what it all means for the people who've invested their hard-earned cash. Stick around to see if these funds are building wealth or just, well, managing it. Alright, let's dive into this report, which acts as a shareholder report for several investment funds managed by investment managers, Series Trust the FUD. Essentially, this is a look under the hood of their investment strategies for the period leading up to the 30th of September 2025. We are going to focus on the financial details we found buried within these pages. First up, let's check out the Astoria Real Assets ETF. For a hypothetical $10,000 investment, your statement shows cost around $36 for this period. That is an expense ratio of 0.63%, which is pretty standard. This fund has total net assets of almost $69.1 million and holds about 73 different investments. The portfolio turnover rate, which is how often they buy and sell investments measured at the end of the reporting period, was 69%. This means they actively managed a good chunk of the portfolio during this time. Looking at their holdings, the top investment at 9.1% is the Spider Gold Minishares Trust. This tells us they are betting on gold as a real asset to protect against inflation or market uncertainty. Other big players in their top 10 include Bitwise Bitcoin ETF at 3.7%, Constellation Energy Corp at 3.6%, Newmont Corp at 3.2%, and Rolls-Royce Holdings plc also at 3.2%. It seems like real assets like gold and silver, along with some big names in energy and aerospace, are making up a significant portion of this fund. Digging deeper into their stock holdings, common stocks make up a hefty 84% of this fund. Sectors like aerospace and defense are about 11.3% of the portfolio. We see companies like Howmet Aerospace Inc., Rheinmetall AG and Rolls-Royce Holdings plc listed here, which makes sense given its earlier mention in the top holding. Then there is a significant chunk in the electric sector, making up 17.4% of the fund. Names here include American Electric Power Company Incorporated, Constellation Energy Corporation, and Vistra Corporation. These are large utility and energy companies hinting at a strategy focused on stable, dividend-paying companies within essential services. They also have investments in mining at 9.8% with companies like Agnico Eagle Mines Limited and Newmont Corporation, and oil and gas at 8.6% with holdings in ConocoPhillips and ExxonMobil Corporation. Beyond stocks, the fund also holds exchange-traded funds, or ETFs, for about 14.9% of its assets. Among these are the ABRDN Physical Palladium Shares ETF at $147,394, Bitwise Bitcoin ETF at $2,533,038, and the Spider Gold Minishares Trust at a substantial $6,311,406. This reinforces the strategy of using ETFs to gain exposure to specific asset classes, particularly precious metals and digital assets like Bitcoin. Now let's look at the balance sheet for the Astoria Real Assets ETF. Total assets are about $69.8 million. Liabilities are relatively low, around $732,558. This leaves net assets at a solid $69.1 million. Paid in capital, which is the money investors have put in, is around $78.6 million. While distributable earnings are in the negative, about a $9.5 million deficit. This is not unusual for an ETF that's still growing. The net asset value per S-share is $18.31. In terms of operations for the first half of 2025, total investment income was about $568,955. Expenses were lower at $176,687, leading to a net investment income of $392,268. The fund saw a significant increase in realized and unrealized gains, totaling over $13.5 million. The net increase in net assets from operations was over $13.9 million. This is a strong positive performance for the period. Next up is the Access Green Alpha ETF. For a $10,000 investment, the costs are around $58, giving it an expense ratio of 1.00%. This fund has net assets of about $42.3 million and holds 54 investments. Its portfolio turnover rate was quite low at 11%, suggesting a more buy and Hold strategy. In the top 10 holdings, we see Taiwan Semiconductor Manufacturing Company Limited, ADR at 9.5%, followed by International Business Machines Corporation at 5.9%, and Contemporary Amperex Technology Company Limited Class A at 4.7%. A good chunk of this fund seems focused on technology, especially semiconductors and companies involved in sustainability or green technologies. For example, Vestas Wind Systems AIIs at 3.0% and Enphase Energy, incorporated at 3.0%, are also significant holdings. This fund leans heavily on common stocks, making up a remarkable 98.4% of its portfolio. The semiconductor sector alone accounts for 26.1%, with major investments in Taiwan Semiconductor Manufacturing Company Limited, ADR Qualcomm Incorporated. And ASML holding NV, it also has significant holdings in biotechnology at 11.2% and REITs or real estate investment trusts at 15.1%. This diversified approach across high-growth sectors like tech and biotech, combined with real estate, painted an interesting picture. Looking at the Access Green Alpha ETF statement of assets and liabilities, total assets are around $42.3 million, with liabilities at just over $22,000. This gives it net assets of about $42.3 million. Paid in capital is significantly higher than net assets at $36 million, with distributable earnings of $6.2 million. This suggests a healthy operational performance contributing to its asset growth. The net asset value per S-share is $38.52. Operationally, for the first half of 2025, the Green Alpha ETF generated investment income of $375,237. Expenses were $212,696, resulting in a net investment income of $170,090. However, the fund experienced a significant net realized and unrealized loss on investments, totaling over $11.1 million. This resulted in a negative net increase in net assets from operations of $2,019,096. So while income was positive, trading losses impacted overall performance. Next, we have the Accession Next G Economy ETF. The cost for a $10,000 investment is around $45 with an expense ratio of 0.75%. This fund has net assets of about $36.1 million and holds 38 investments. Its portfolio turnover rate was faster at 27%. In its top holdings, Nevada Idia Corporation is a major player at 11.3%. This immediately tells you this fund is heavily invested in cutting-edge technology companies. Taiwan Semiconductor Manufacturing Company Limited, ADR is next at 9.4%, followed by Broadcom, incorporated at 7.6%, Meta Platforms, Incorporated, Class A at 5.8%, and Synopsys, Incorporated at 5.6%. The focus here is clearly on the future economy, with major stakes in chip makers, software, and internet giants. Common stocks make up 80.5% of this fund. The computer sector is at 1.6%, but the internet sector is a massive 14.4%, with holdings in Alphabet Incorporated, Amazon.com Incorporated, and Meta Platforms. Incorporated semiconductors are also right up there, taking up 29.5% of the portfolio. With significant investments in Broadcom, Incorporated, Nevada Idia Corporation, and Taiwan Semiconductor Manufacturing Company Limited RDR. Software is another big one at 28.6%, featuring companies like Aploven Corporation, Cadence Design Systems, Incorporated, and Snowflake. Incorporated, clearly, this fund is all about future technology and internet-based businesses. They also have a stake in ETFs accounting for 8.2% of the portfolio. Notable ones include the CraneShares CSI China Internet ETF at 11207 for $3, and the XTArches Harvest CSI 300 China A Shares ETF at $1,070,069. This shows a global focus within the technology and internet space. For the Accession Next G Economy ETF, total assets stand at about $36.1 million, with liabilities of only about $74,000. This results in net assets of $36.1 million. Paid in capital is $25.3 million, and it has a healthy $10.8 million in distributable earnings. Its net asset value per share is $90.13. Looking at its operations, this fund had a small net investment income of $21,850. However, it saw a massive net realized and unrealized gain of over $10.4 million, primarily driven by the strong performance of its tech holdings. This led to a net increase in net assets of over $10.5 million for the period. Finally, let's look at the Access Knowledge Leaders ETF. This one has cost around $41 for a $10,000 investment, meaning a 0.76% expense ratio. It has net assets of $39.2 million and holds 65 investments. The portfolio turnover rate here is a very low 0%, indicating a significant move towards a static, long-term investment strategy, or perhaps a recent change in holdings with minimal trading since. When we look at its top 10 holdings, Micron Technology Incorporated leads at 4.3%. T-Connectivity PLC is at 4.0% and Train Technologies PLC at 3.2%. Garmin Limited is at 3.1% and LabCorp Holdings Incorporated at 2.9%. This portfolio seems to be more broadly diversified across various sectors with a focus on established companies and potentially those with strong intellectual property, hence the knowledge leaders name. Common stocks are a dominant 90.5% of this fund. It has a wide geographic spread with significant holdings in Japan at 24.6%, featuring companies like Ebra Corporation and Fana Corporation. Switzerland at 8.6% includes Garmin Limited and Sika AG. The United States also makes up 14.5% with Boston Scientific Corporation, GA Healthcare Technologies Incorporated, and Stryker Corporation. This global diversification suggests a strategy to capture growth opportunities across different regions. For the Access Knowledge Leaders ETF, total assets are around $39.2 million with liabilities at about $13,400, resulting in net assets of $39.2 million. Paid in capital is quite high at $41.6 million, with a significant accumulated deficit of $2.3 million. This could indicate earlier periods of underperformance or higher initial investment costs. The net asset value per S-share is $50.70. In terms of operations for the first half of 2025, this fund generated solid investment income of $493,740. Expenses were $160,193, leading to net investment income of $333,547. They also saw good realized and unrealized gains totaling over $5.8 million. The net increase in net assets from operations was over $6.2 million, showing positive momentum for the period. Overall, looking at the consolidated statements of assets and liabilities for the Access funds as of the 30th of September 2025, we see a mix of performance across the board. The Astoria Real Assets ETF is the largest by net assets at $69.1 million, followed by the Green Alpha ETF at $42.3 million. Knowledge Leaders ETF at $39.2 million, and the Esoterica NextG Economy ETF at $36.1 million. Interestingly, while the Green Alpha ETF has the highest expense ratio at 1.00% as seen in its financial highlights table, the Astoria Real Assets ETF has a ratio of 0.63%. The Esoterica NextG Economy ETF manages to keep its expenses around 0.75% despite its focus on newer tech. The Knowledge Leaders ETF has a relatively low expense ratio here at 0.76%. Digging into the notes on federal income taxes, we see the net unrealized appreciation or depreciation on investments. Astoria Real Assets ETF shows a healthy appreciation of $12.8 million, while Green Alpha ETF is also in positive territory with $8.7 million appreciation. Esoterica NextG Economy ETF has a depreciation of $467,047, and Knowledge Leaders ETF has an appreciation of $5.3 million. This gives us a snapshot of the unrealized performance of their portfolios. Now, for my take on this, the Investment Managers Series Trust II ETFs show a diverse range of strategies. The Astoria Real Assets ETF seems to be playing it safe with real assets and utilities, aiming for stability perhaps. The Green Alpha ETF is clearly betting on sustainable and technology companies, but saw some losses in this period. The Esoterica NextG Economy ETF is making bold bets on cutting edge tech, and that's reflected in both its strong gains and the inherent volatility. The Knowledge Leaders ETF with its zero turnover suggests a very long term, perhaps even buy it and forget it approach. The key takeaway is that these funds cater to different risk appetites. If you want exposure to gold and stable dividends, Astoria might be for you. If you believe in green tech and are willing to ride out some volatility, Green Alpha could be a fit. For those chasing the next big tech revolution, Esoterica is the play. But be prepared for the ride, and if you just want to invest in established companies for the long haul with minimal trading, Knowledge Leaders is an option. The biggest risk across the board, as always with diversified funds like these, is a broad market downturn. Opportunities lie in the continued growth of their respective sectors. especially technology for esoterica and green alpha. Alright, that's our deep dive into these investment managers series trust to filings. What is your take on these numbers and what they signal for the future of these ETFs? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more corporate deep dives. Don't forget to check out the Discord community linked in the description below. Thanks for watching, see you next time.